And we are live. Welcome back to the Spark community for Spark Spaces, episode 7. Things are flying at an incredible pace, exciting paces. It seems every week we're building, expanding, and just making things and DeFi much cooler than it was the day before. Today we've got a very cool list of guests that have joined us. We've got, of course, we've got Sam, the CEO and co-founder of Phoenix Labs. But we've also got Joe Flanagan, who is the co-founder of Maple Finance. And obviously, we came out with a massive announcement this week with our partnership that has been deployed with Maple Finance that we're really going to spend a few minutes today to talk about further. And then we've got Vance Spencer from Framework Ventures. So welcome, everyone, to today's Spark Spaces, episode 7. How's everyone doing?
Really good.
Cool.
Going well, thanks.
Awesome. Okay, so obviously, Vance, you are fairly well known within the DeFi landscapes, and Joe, your obviously your profile is getting into parabolic statuses lately. Congratulations with a milestone that you guys achieved this week with $1 billion in TVL. So a very exciting time for Maple Finance. But I'm just going to give you guys each a little bit of time to maybe introduce yourself, and of course, a little bit further, background on the projects and what you are currently working on. So, Joe, we'll start with you.
Okay, great. Thank you for that introduction. Parabolic is what we're aiming for. My name's Joe. I'm co-founder of Maple. Maple's been around. Sid and I started in 2019 back in Australia, and we first started out with the intention of bringing institutional lending to the crypto space. And that's really what's been our bread and butter, and where we've seen the most amount of growth. And as we start with further expansion into the space, we're now starting to position ourselves as one of the leading asset managers on chain. And the Spark announcement that happened this week is certainly part of that. And so Maple at its core facilitates institutional loans out to all of the largest institutions in crypto. And these are all fully secured loans, so backed by digital assets. And these are all exchanges, market makers, liquid funds. Think of all of the financial service institutions that exist within crypto. They're all of our customers. And so we're now one of the largest lenders across crypto, and specifically for institutions, and starting to see a lot of growth. And so, as you mentioned, we just crossed $1 billion this week on the back of the announcement with Spark. And we think that's just the tip of the iceberg on where we can go as an asset manager on chain.
Yeah, it's definitely some exciting times being the pioneers in the space. I think we're all kind of very obviously excited about the way things are heading. Institutional demand is on the increase, and of course, the capital keeps flowing. So very, very exciting times ahead of us, and definitely an indication that the industry itself is becoming a lot maturer. We're getting recognized in a decent and sizable seat at the dinner table, so to speak. So very exciting times ahead. Thanks for that, Joe. Vance, obviously you're very active in the space. I've been following you for a while on Twitter and myself. Always dropping alpha, always dropping those pills of wisdom over there. But for the audience over here, a little bit more about yourself and what are you up to?
Sure. I'm Vance Spencer. I'm one of the two co-founders of Framework. Framework is we manage probably around $1.5 billion of capital today. We have 4 separate venture funds. We are a venture thesis oriented asset manager. But really, I think we got our start pioneering DeFi investing, and not just investing in DeFi, but being the second largest LP of Uniswap for a period of like almost 2 years, bootstrapping a lot of on-chain primitives. And I think in a lot of ways, the fund and the thesis and the strategy has come full circle, where we are now kind of almost not exclusively focusing on DeFi, but we view that as the conduit for which all things will kind of be realized within crypto. And, we're the largest holder of Sky outside the core team. We've kind of been talking with Sam and Spark for a long, long time, and a long time holder of Maple as well. And I think these two teams are honestly just like some of the most serious people in the space, and the people who are actually building things that are going to bring not just stablecoin growth, but the growth of things like private credit and a real on-chain economy that will benefit everyone. So, I mean, whenever I see, the Spark guys or the Steakhouse guys or the Maple guys, like these are the conversations that I generally enjoy the most. These are the actual serious people in the room. And I think my job is to support them, and seeing the growth start to pick up is just unbelievable. Every day I check the Maple dashboards, the Spark dashboards, and it's great when it's up only. And they deserve all the compliments they've been getting, both teams.
Awesome. Thank you very much, Vance. Sam, obviously no intros needed, but what's going on in your world, and maybe a few comments on the announcement that we made this week with Maple.
Yeah, for sure. I mean, this is really exciting for us. Historically, Sky, previously MakerDAO, it's been very constrained on-chain lending. It was the pioneer of the CDP model, allowing people to mint the DAI stablecoin against ETH and other crypto assets. And this recent addition via the Spark liquidity layer of Maple Syrup USDC allows us to now bridge out to off-chain lending. It's still the same style of lending, over collateralized secured lending with crypto assets, mainly Bitcoin in this case. But this is an entirely new market of institutions who are ready to take out quite large loans. And so we want to support them in any way we can. And so Maple has built out the rails that we can tap into this. And maybe it seems kind of easy, like why wasn't this done a while ago? And it's really like we are a fundamentally on-chain organization, and so bridging out into more traditional venues has actually historically been quite difficult. Even as something as simple as like investing into treasury bills, that was had to be built out over several years, and it's only just now starting to mature with some of these tokenized T-bill products coming on the market. But Maple is another such venue where, especially with the recent growth of Bitcoin, there's a lot of demand out there for borrowing US dollars against Bitcoin. And so now we're finally able to tap into that new market via Maple, and that's extremely exciting for me.
So this is one of the final important steps towards the Holy Trinity, so to speak, with the bridge between CFI, TradeFi, and DeFi, right? So a very positive move towards, obviously, yeah, like we said early on, a level of maturization. But yeah, obviously it's coming at quite an exciting pace. I think I'm just going to use that as a segue. Vance, obviously there's a lot of institutional demand on the rise. Have you seen, and when did you start to see the kind of the tables turn, so to speak, in terms of who was driving the conversation? So historically, the industry was kind of going DeFi. DeFi needs to get into institutions. Have you seen a notable difference in now institutions are tapping on DeFi's shoulder, wanting to get involved into what is arguably the future of finance and institutional lending?
I think it's really a this year thing, and I think Maple and Spark have both kind of pioneered this, but you see Biddle get $2 billion of AUM in it, and BlackRock is like a hundreds of billions of dollars of AUM firm, and this is the thing that they're promoting, and this is the thing that they are tweeting about and publicizing. And I think it's a reflection of this is a major tech trend that they believe that they're riding, and it'll help them with multiple expansion in the near term. But over the long term, I think you're going to see things like the treasury bonds and bills get issued on chain, and this becomes the native place to transact. Where the nexus of Spark and Maple really comes to pass is building out a robust, bespoke private credit flow on chain, and being able to allocate to that and have a good risk control and a good amount of liquidity backing it. And again, like really, you look around the ecosystem of crypto, and nobody else is doing that stuff. And maybe another trend that's kind of developing in parallel with all of these tokenization themes and the rise of real institutional lending is private credit is also starting to ETF itself. So Apollo launched their private credit ETF, I think 2 months ago, and the inflows have been kind of tepid. But I think what they've realized is that stable coins and the on-chain economy are an amazing place to source demand for that, and it's just a different angle of distribution of liquidity. They can borrow against it, and it's composable. And so I think that stuff there's a lot of different trends developing in parallel. I wouldn't say TradFi or crypto are calling the shots today. Really, what we're interested in is just the convergence of those two things, and maybe like a quick anecdote is like after 2008, all these PE firms started insurance companies. And that was the lever that they really used to grow and build out their initial, run of AUM and private credit business. I think they see stablecoins and generally kind of like the on-chain economy as the next iteration of that. There's $3 trillion market cap in crypto, a few hundred billion of stablecoins. All of those things would move the needle for those firms if they can actually access them. And that's where Maple and Spark are actually doing real work.
Awesome. Thanks, Vance. Joe, a question for you. What currently differentiates Maple's lending infrastructure from other DeFi lending platforms when it comes to institutional capital?
Yeah, well, I think that's the key thing to think about with Maple, and our differentiating factor is that we really sit at that confluence of DeFi and institutional markets. And so, as Vance is alluding to, from the start of this year and the change in administration, we've seen a huge pickup on both sides, right? And so it's not that we want all traditional capital just flowing into DeFi, or that we want all DeFi going out into treasury bills. It should be that there's an equal flow of capital, and that's going to be the convergence of the industries. And when DeFi and TradFi come together through time to just be financial markets again. And what we hope with those new financial markets, and what we're hoping to do with Maple and with integrations with Spark, is that we're able to be the cornerstone of those converging of the two financial systems. And so that we can leverage all the benefits of blockchain and DeFi systems and DeFi markets with the capital flows and products that exist within the traditional space. And so I think we're starting to move away from this notion of like, well, if you're in DeFi, then you just got to be exclusively in DeFi. Or if you're in traditional markets, then you've just got to be in traditional markets. And I think you've seen that with the announcements. So we have now the largest balance sheet in DeFi, allocating through Maple and utilizing our asset management services. Then we also had the announcement earlier in the year of Bitwise, who is a registered investment advisor, allocating and running Bitcoin ETFs and many other products allocating into Maple. And so we really are proving out that we sit at this convergence of the two and can be one of the key players in helping to facilitate the evolution of financial markets coming together to utilize all the benefits that blockchain and DeFi is going to enable for a much brighter and better financial system in the future.
Awesome. Yeah. I mean, Sam, then this puts Spark in a very interesting position in terms of conversions, right? We have a very important role to play in how these all come together. And although we are obviously non-custodial, but we do have a significant role to play in that convergence, or the idea of convergence of the future, right?
Yeah, absolutely. So really, I view this as just unlocking new markets that previously were trapped away. So initial markets that Spark was able to tap into, this is since the beginning, as I mentioned, the CDP on-chain crypto over collateralized vaults. That's the bread and butter of MakerDAO, and now Spark is carrying that on with the Spark Lend money market. And so that business is great, but to continue to grow, we need to tap into new markets. And so last year, we saw the tokenization of the basis trade via products like Athena, and then Spark was able to quickly tap into that and gain new borrowers via the perps products on centralized exchanges. This is more capacity to deploy. And then as recently, I guess this was like a month ago, we've just started allocating to the Grand Prix. So that's rapidly ramping up. So that's deploying $1 billion into tokenized treasury bills. And we still have more to go. The balance sheet of Sky is quite large. And we need to ensure that we can produce the best capital efficiency for that balance sheet. That is the job of Spark. And so a product like Maple, we've just started at 50 million, but I think this can grow to be quite large. This is a sizable new opportunity. This is a new market, and we're able to grow this. And this is new, better yield that can be delivered to the holders of these Spark savings products. So they know that when DeFi rates crash, if you're on a money market, your rates will also go down. With Spark, we will rebalance between TradFi, CFI, and DeFi to ensure that you are always getting the most optimal yield. Another interesting integration that we did recently was into Coinbase on Base. So we are deploying, we're one of the largest LPs into that market, and that allows people who use the Coinbase app they can borrow against their Bitcoin there. Again, this is a new market that we previously didn't have access to. And so Spark is really all about tapping into these new markets and delivering the best possible risk-adjusted rate for people, for users within DeFi. And Maple is one of our great partners to help us do exactly that.
You mentioned early on in a DM that we made the announcement yesterday. It was Tuesday, no, 2 days ago. Sorry, days are flying by really quickly. And that was sitting at $50 million, right? The allocation with Maple. You mentioned that number has potentially doubled. Can you give us some insight into that?
Yeah, absolutely. I mean, we've been deploying into Maple as a normal precaution. We just ramp these things up slowly, but there's so much demand out there that these guys have been able to deploy it like almost immediately. So the goal here is to continue to scale and to continue to tap into this market. So we've already doubled the amount to 100 million. So we're growing to that over the next week.
And just to touch on that, Philip, is that Sam alluded to it, but the amount of demand that we're seeing from institutions to borrow is just continuing to expand. There was a great report released by Galaxy earlier this week, which kind of gave a bit of insight into the crypto institutional lending market and the players that exist, and a really good comparison from where we're at in this cycle in comparison to last cycle. And so if you just look at the amount of leverage that exists in the system, it's probably about 50% or less of where we were at the peak in 2022. And so you can just see, and then if you look at that in comparison to the total market capitalization of crypto, then where we're at in the cycle and where we're at in terms of the potential demand is just going to be orders of magnitude from where we're at today. And I think the big thing, the big unlock is that every institution now is looking to hold Bitcoin. And so it's then what is the utility that they're able to enable on that Bitcoin? The first thing they're going to look to do is to borrow against it. And so this is where, speaking to that convergence piece, is that we're now not starting just to look at crypto native firms to borrow against their Bitcoin, but as more and more corporates bring Bitcoin to their balance sheets, then it expands the potential borrower set that we're able to access out of just crypto native institutions. And so that's why it's important not to just think about this as capital inflows into the DeFi ecosystem, but how those two are coming together from both a borrow and lend perspective.
Joe, with demand, I mean, surely there's also a gap on understanding and education, right? So are you seeing a lot of institutions starting to hire crypto natives? Because one of the insights that we had, obviously, with Grand Prix is the reason a lot of this took so long is because still we're using quite foreign technical terms that, TradFi might not necessarily comprehend or understand at this moment. And it takes a little bit longer for institutional decision making because of the sort of the foreign nature of the product and service being sold. Are you seeing, from an institutional demand perspective, are you seeing a lot more awareness and understanding of what obviously DeFi and crypto at large have to offer, or are you seeing still a lot of education required to get that meet the demand curve?
It's definitely so much better than it was, but still a long way to go. And so what I would say that what you're not seeing is you're not seeing like DeFi natives going into larger institutions. What you're seeing is existing people within institutions upskilling and up-leveling their knowledge of crypto. And I think this is all on the back of the ETFs, and that there is top-down the demand or the request that, all right, look, this stuff in crypto seems legit. We've got to go and now go start and play in it. And so with that kind of top-down push, we're now starting to see a lot more reach out and a lot more engagement. The thing that's always hard on the education side is the infrastructure setup, right? It's very hard for compliance and operations teams to get across this, much more than it is like the commercial side of these businesses. They're able to make that decision that they want to deploy pretty quickly. It's then all of the operational setup and the risk due diligence that you have to go through. So with Bitwise as an example, that was a 1-year process of due diligence. And so we're kind of like willing to wear that ourselves and go through that pain to be part of that education process so that, yes, it helps Maple and they allocate into us, but is hopefully helping the broader ecosystem as well, because then they're set up to do other allocations outside of just Maple.
Awesome.
Yeah, just to highlight that, I think the moment that's about to happen has been, years in the making. Maple building out its offering, its underwriting practices, its client base. Spark building out the allocator, Sky building out its balance sheet. Like really, this stuff is starting to accelerate. And if you are following this space, you should go to info.sky.money, click on Spark, and just see the rise. And then you should also look at rwa.xyz and check out Maple. But I think you're going to see a period of time where like one of the more famous calls that I made was like DeFi TVL from like 5 billion to like 100 billion in 2019. And everyone was just like, you are smoking crack thinking that. But I do think now it's like Sky can give you a higher savings rate. Spark can allocate into things that are a hybrid of treasuries, private credit, on-chain things. Maple has exotic, bespoke, institutional credit flow that's high quality. Like all of these things are building to this moment, and I think crypto broadly is like trying to do like Jedi mind tricks on some coins. So like maybe if we like improve the vibes, like they'll go up again. But I think a lot of this is just like economic gravity and activity starting to play out, and that will benefit Maple, it'll benefit Spark, it'll benefit Sky. And it's a totally orthogonal trend to what crypto has been working on for the most of its history.
Yeah, I mean, we're obviously sitting inside this tent of enormous capital injection flows, and but everything else, just from a macro point of view, seems to be kind of like in a holding pattern because of the uncertainties, right, with tariff wars underplay and all that. But in our world, things just seem to be growing and moving faster. So, Vance, just some commentary there. Like, do you think we sit in isolation, or do you think it's because it's so many years of build up that's got us to this point that now things are happening, and will just start happening a lot quicker and a lot larger? But how does this relate into sort of the macro term in a general market sense?
So I think really kind of the largest theme that's going to play out is like stable coins that offer yield that's above SOFR, which is the risk-free rate. They will gradually just terraform all the stable coins in crypto, and that will give them more ammo to deploy into things like Spark, which will deploy into things like Maple. And so each of those businesses will have probably a few hundred basis points of net interest margin. And so as stablecoins grow, these protocols will grow, their profits will grow, they'll buy back their token, the earnings power will really kind of manifest. And I think really this starts to take shape in if you think about Apollo, their core products, they have about 300 billion, they're like a half a trillion total AUM, but really their core products are 300 billion. If Sky can get to 50 billion, 100 billion, that would mean that Maple and Spark are the size of the largest regional banks in the country. And I think at that point, it's just like undeniable. And I don't see anything that would prevent, the ecosystem from going there. Um, I think there is, last cycle, it was like we were kind of capital constrained because the stable coins weren't that big. This cycle, it feels like we're more kind of like borrowing opportunities constrained. But I think that's a lot of the work that's been put in around like you tokenize the basis trade, Spark can allocate to it. Maple has a growing variety of institutional borrowers that will take capital. And as long as that continues, which like I think both of these teams are going to continue to execute, like this will be the largest market in crypto in fairly short order. I would put yeah, I mean, I think this is basically if you're looking for like a port in the storm of the bear market, whatever you want to call it, like these are the serious people building things that will have real earnings power to buy back their own token.
Yeah, absolutely right. I mean, one of the key metrics that we follow, I follow quite closely for various reasons, is the revenue metric, right? And so far, Spark is consistently in the top 40. We sit around 35 to 25, and it fluctuates, around that mark. But I mean, protocols are starting to make some significant revenue. And as you mentioned, like just in terms of total, potential capital size, we're bigger than many regional banks. But of course, from a legal point of view, we are not a bank, and that you would have noticed in our tagline. So we're very cautious on that, right?
Good job. Yep. Not a bank.
Not a bank, not a bank. Joe, obviously, with all this excitement and capital flow, there obviously is a certain level of risk. Can you give us a little bit of insight into how Maple mitigates and manages risk?
For sure. So firstly, these are all over collateralized loans to all of the largest institutions in crypto. And so we're taking all of the major digital assets as collateral. And so this is Bitcoin, Ethereum, and then to a much lesser extent, like XRP and Solana, and then some DeFi assets. So like some of your more stable assets, like a PT, SUSDE, or something like that. But the majority of our loan book is Bitcoin and then a little bit of Ethereum and then a little bit of the other stuff. The way that we then manage that book is that we have an automated system that is managing the collateral across qualified custodians and different custodial services. And so there's 24/7 monitoring of all of the collateral. It then issues out automated margin calls to our institutional borrowers when their levels get hit. And so as a like typical vanilla backed Bitcoin loan, you're looking at a 60% initial LTV, loan to value ratio, 70% margin call, 80% liquidation level. So you still get lots of protection between the amount of the loan versus the value of the collateral. And to give some numbers on that, we've been running our secured lending coming up on 2 years now. We've issued hundreds, close to 1,000 margin calls, and our average turnaround time for a margin call being serviced is less than 3 hours. And so that speaks to the quality and size of the institutional counterparties that we're lending to. It's because it's as much about underwriting them as it is about underwriting the collateral. And so you have that dual protection of where we're taking full recourse against the institution, as well as then the collateral that we control and have the ability to liquidate. And in that time, we've only ever had one partial liquidation. So no losses, one partial liquidation to protect lenders, and then close to 1,000 margin calls. So that speaks to the systems that have been built out, and the way that we're able to manage our lending capital and ensure that there are no losses, and that risk management sits front and center in everything we do.
Awesome. 3 hours seems like a staggering turnaround time. I mean, is that industry best, kind of speed, or like how does that compare to a TradeFi example?
Yeah, so I mean, a TradFi example would probably be much slower, but you've got the benefit of everything being 24/7 trading, right? These are fully liquid assets that are available on blockchains to distribute and top up collateral when it's required. And so that's one of the big things in our underwriting of an institution to borrow is that, do you have 24/7 operations? Do you have a desk in Asia? Do you have a desk in Europe? Because the fact that everything's 24/7 means that you need to line up your operational setup to that as well. And so this is all part of the onboarding to Maple, and in the screening that we provide. And so and this is to our expertise, right? We sit at the best of bringing DeFi and smart contract technology, as well as institutional and quality processes to the way that lending needs to be done. And so that combination is our real separation, and why we think that $1 billion is really just the start, and that we'll be able to be a credit-focused asset manager to allocate billions and billions of dollars into the future.
Awesome. I'm going to put in your diary the $2 billion mark. When you hit that milestone, we're getting you back on a Spaces.
Well, they say the first billion is the hardest, so
Exactly.
hopefully it won't be too soon.
So yeah, we'll see you next week, right?
Give me 2 weeks.
Give it 2 weeks. Okay, cool. Guys, thank you so much. I did promise, obviously, stakeholders, we'll try to keep this conversation to 30 minutes. We've got, obviously, business as usual and a lot of things on the go. So, guys, I would really appreciate some final thoughts, Sam, from your side. And, we can look to wrap up. We are coming on the half an hour. So, a few final thoughts from you, Sam?
Yeah, I just want to reiterate what Vance said. And I've been in the space for 5 years now, and it's really been the past few years. I've seen this huge transformation to maturity, with the institutions getting involved, very serious people, not messing around with meme coins and stuff like that, but actually improving the financial rails of the traditional finance system. And so I'm just very excited. Each of these integrations, maybe they're not that exciting to everybody, but they're very exciting to me because it's just this next step to really revolutionizing the world of finance and improving everyday people's lives by improving the status quo.
Absolutely. That excitement is shared across the board. you can feel it also at a community level. So keep up the amazing work, Sam. Joe, some final thoughts, and then we'll go to Vance.
Yeah, no, super excited about the partnership with Spark. It's been a long time in the making. We've been, in different variations of discussions with Maker for many years, and so it's great to see it all come together. And this first 100 million is really just the start. Like, we see ourselves as being great partners where we represent the kind of institutional allocation arm of Spark and can be real stewards of that capital. And ensure that everyone that's allocating into the Spark ecosystem and into Sky overall is getting the best risk managed returns that are possible.
Awesome, thanks, Joe. Vance.
I think general advice is, I'm very badly nerd sniped by this stuff. I don't think it's boring, but I think like really there's a lot of meat on the bone intellectually around what is happening at the convergence of tokenization, ETFs, and stablecoins. And these two teams are leading the charge. And lending is still down like almost 50 to 60%, maybe even more from the peak of 2021. And so there's so much room to grow. And if you're looking for that same DeFi TVL going parabolic moment, I would say that, credit is really going to be that moment in this cycle. And in ranging markets, credit and lending and farming are really kind of the things that tend to have product market fit versus kind of like a swapping based economy. And so this is where the activity is happening. And, these are the best teams in the space. And, disclosure, we're token holders of, Sky, of I guess Spark in time and Maple today. But, we're very, very confident in everyone involved.
Awesome. Thank you very much for the words of encouragement. Guys, thank you so much. We are going to start to wrap up. Firstly, thanks for everyone who dialed in. Spark Spaces episode 7 coming to a conclusion. Amazing announcement with our expansion with Maple Finance this week. So, it's been a jam-packed year already. We went out with a couple updates yesterday on the amount of stuff we've managed to achieve in a very short period of time, which is staggering. We are moving really quickly, and we've got some of the best partners and obviously token holders. I'm winking at you, Vance. On the teams, making it all happen. Yes, using the gray matter. So, guys, thanks so much for taking time out today and joining us on the Spaces. We appreciate your time and your opinions on all of this. And to the Spark community, thanks for dialing in. We'll catch you next week. All right, guys. Thank you. Ciao.
Thank you.
Thanks, everyone. Bye-bye.